Hello world. This video is about review of the financial year for 22 and outlook for 23, and a little bit talk about FTX. I'm Yusuf Bonaparte, Associate Professor in Finance, CU Denver, and a research contributor for institutional companies. The outline is going to start with FTX, which is an exchange, and then stock market 22 review, tax implication for the stock market 22, and then outlook, stock market 23 outlook. FTX is an exchange like the CME is an exchange. The NASDAQ is an exchange. A dealer, where you go and buy a car and you sell a car, this is an exchange. You meet somewhere and you trade the products and the goods. That's an exchange. FTX is an exchange, but the majority of their products, financial products, were crypto and tokens, and that's the reason it rocked the crypto world. The problem was lack of regulation, similar to the movie, if you've seen it, about the Wolf of Wall Street. Same story. Somebody not managing the business properly or overconfident, and that's what happened. The lesson is two things. Number one is we need more regulation to regulate this, all the exchange financial market, because exchange in the financial market build in trust, and the trust has to be oversight. And number two is CEO risk management. Again, when I watch a video interview with George's in ABC, obviously he argued that he would love to, if time goes back, to oversight the risk that his company taken. The inference is we need more regulation. The SEC should be involved in all the exchange because it has to do with financial product. Maybe the Federal Reserve. And one more thing, I published a paper in October about crypto regulation, and I point this out. I pointed that exchange has to be regulated. The paper published and the book published, but unfortunately there is no enforcement from the US government to follow my advice. The stock market review of 22 is simple. Anybody can see it. It was a bad year. All the asset classes went down. Equity, crypto, real estate, all of those went down because the interest rate went up. My winners, I was lucky with the FICO. I loaded a lot of FICO. Maybe I was lucky, maybe not. But the reason I bought FICO because it's a credit scoring company. And then in the bear market, a lot of demand for credit scoring. So will be high demand on it. And then technical. In the 21, FICO did not do very well. So I thought it's time for, this is supposed to be a good year for FICO. Number two, I bought fiscal, which is a solar panel ETF. It gave me 91%. That because Democrats are in power and more bills are passing to support solar panel. Also, I bought it a lot because I thought the war, Ukraine-Russia war, will motivate for using renewable energy and clean energy and this kind of energy. Now, to claim your losses in the stock market is not easy. So there is tax implication. If you lost like 60% or 70% in Shopify, and you want to claim your tax return, your losses, first, you have to sell the stock before December 31st. But you cannot buy it for a month. You need to have a window of 30 days so you can buy it again. So if you sell it in December 30th, you cannot buy the same stock in January 3rd or 4th. You have to wait 30 days. If you didn't wait 30 days, then you cannot claim your losses. The problem is, so what? Why not to wait? No, you cannot wait because the problem is to wait because what if you sold Shopify and then Shopify went a good run for 20%? Happen. So you're taking a risk by claiming your losses. So the way, if you really want to claim your losses, first you have to talk with your financial advisor. Second, you have to find an alternative. Like if you sell Shopify, maybe you have to buy Etsy or buy an ETF that includes Shopify. So if Shopify going up, the ETF will go up. But you didn't want to be exposed. You sell it in December 30th, and then it has a good run until you buy it in February and you buy it in an expensive price. I suggest you talk with your financial advisor and understand the tax implication for your losses. The stock market overview for next year is not easy, but it has a chance that the market going up. First, let's look at the statistics. And I collected data 77 years, I guess, from 1945 till current 21, 22, 21. And I looked to the year by year, the stock market performance. I found that 19.48% of the years, the stock market went down. That means 80% and a half, almost, the stock of these years went up. So in average, 20% or 19.5%, the stock market will go down, and about 80+% the stock market will go up. That's an average. The chance to have a bad year, back-to-back bad years, like we have in 22 and 23 to also be bad, is only 3.9%. So back-to-back years, market down, it's very little chance, 3.9. 3 years in a row to have a bad market is 1.3%. So therefore, there's a chance of 96% not to have a back-to-back years in the market. So I think the stock market will be well next year. The stock will show resiliency. The Federal Reserve, I think, will not continue raising the rate. Inflation will cool down a little bit. And therefore, I recommend for myself, I will go buy this for next year. And I'm not a financial advisor, but talk with your financial advisor and get more advice. I think it's going to have a good year. Now, there is a fiscal cliff problem. The US government will have less taxes. I put it in black because I wanted to be focused here. Because the stock market went down and people claim credit for their losses, there's going to be a shortfall in the government revenue. As such, the deficit will increase, and then the overall debt will increase, and then the Congress have to extend the debt to a new level, and we may expect a political theater where Republicans don't want to extend the level of debt for the government. So that's going to come also next year, because April we have to send our taxes. In May, June, the budget will start seeing there is a big holes and short in revenue, and then the government will have to extend to pay for their services and goods. They need to sell bond. When they sell bond, the debt going up, and then therefore the ceiling, we need to increase the ceiling for the debt. That's pretty much what I have for you today. In short, claim your taxes for 22. Don't think a lot about FTX. It has nothing to do with the crypto. It's a bad management by the CEO. We didn't do risk management properly. There is no regulation. We should have regulation. And the market 22 was the only thing good about it is the losses. You can claim them with some tax ideas. And we expect the next year to be a good year. Thank you so much. And I hope I was short and sweet with my video.